All right, good morning and welcome back to the live trading and discussions sessions. Right now it is 1st February 2018 and we are starting this session for the first time, and this will be exactly what we'll be doing and what we intend to do in the subscribed service that we are offering around live trade calls for the Telegram channel, on the private Telegram channel, including 1 hour session for live trading and discussions. All right, so let's get started off. This session will be posted on the Telegram channel right after completion. We are just about beginning, 15 minutes delayed. Right now, as I said, I was traveling, but this is only for today. Tomorrow, it starts exactly at around 9 a.m. Eastern Standard. Alright, so this session will go on until maximum around 10:15 a.m. Eastern Standard today. And let's get started off with a few trade setup. Let's trade together, brothers and sisters. Uh, as I said, this session is going to be focused on the trading part and not the educational or training part. So we are going to focus exactly at as practical as possible. All right, let's make money. Let's make money together over here. I'm not going to do some wave counts and stuff like that, but there has to be something which needs to be done in terms of the wave direction at least. All right, 1553 was the termination point of wave 4 of higher degree. You know that. After that is wave 1, 2, most probably we have done wave 3 here, and we are ready to go for the fourth wave, right, which should go all the way towards the 2200 mark. All right, that's the first time frame. Daily chart. Simultaneously, we are going to do a we're going to play some figures that's going to help us take a trading decision. And those who are interested for really real trading and making money together, after seeing this session today, you might want to subscribe to through the web page japee.business.site. Okay, what I've done here is spreading the Fibonacci ratios of wave 3 in particular, and that is the support is coming around 1.2225. These are the last phases of my disturbing sound here. Kindly excuse me for that. Channel again, the Elliott channel. If you are expecting wave 4, then the channel, alright, connected one waves 1 and 3 and parallel through the second wave. Do you see it's all boiling down to 12, 25, 20 kind of figure. Alright, so now we'll also keep major supports in line. You've got to write these down if you can create a trade journal. We are into real business now. We wanted to take this as a real business for the entire year 2018. So take it as a trade journal and jot it down. I'm going to trade not on this PC, but gold and euro. Will be trading on my mobile phone. So we'll be trading at least two together. So the first support rings in around the 2164 mark. We want to write it down. Supports 1.21, 50, 60 kind of levels, followed by 1.1900 and 1.1700 and then 1.1550. That's the daily chart supports. We also want to write down channel support coming around 1.2220. All right. You might want to also do the studies, but I think it's not required for now. Let's go back on the 4-hour chart now. See, this session is not much time bound. We've got enough time. We should be taking enough time to analyze the charts properly and then taking a call. All right. So we are not at all in a hurry. We are going to be here for at least 60 minutes, and this is just the beginning of this trading idea. It could continue for a couple of hours very soon. Four-hour immediate trend line sorry, being gone. Prices are trading in sell zone. So resistance, even if you don't want to write it down, you might use an arrow, and 1.2537 is interim resistance for now. Please keep in mind we are looking for the fourth wave to terminate somewhere in the vicinity of the 2200 mark. All right, and it's due to this process that we find out how the waves are expected to unfold actually. Again, if you want to, you can do your Fibonacci numbers of the third wave. Always keep the Fibs in your mind. Fibonacci ratios, that's what I mean. All right. You might want to also have a look on the oscillators, especially the RSI, because that's something which is one of the indicators which you can find out if it's at a resistance. See, it's reversed from 60 now, and diffusely there's been a bearish divergence already. They were new high in terms of price, but not a new high in terms of the RSI numbers, and then a drop and pulling back towards the 60 could be the next leg. All right, somewhere around the 30-40 region. If what we are counting is fourth wave, then it would kind of terminate somewhere around the 30-40 mark, ideally around 40. Sometimes it may dip towards the 30 region as well. All right, so preparing to go for a drop from here, and finally the hourly charts. And I said might want to just plot your potential waves ABC question mark. Well, those are your numbers. Fibonacci ratio. So if we want to simplify the structure here, the drop from 2537 towards 2334 is your wave A, the first leg, and that is your second leg, probably already done around 2475. If this wave structure is correct, you may also want to check out with your counter trend lines. Things are already falling in place. Be very careful. It's already in the sell zone now, but this line doesn't mean much. If we have done the counts properly here, brothers and sisters, the extension is, this is what the trade is. All right, 1.2209. Now what you'd like to do is, okay, you might want to just compare everything. You might want to just shuffle your dailies and 4 hour. If you remember, the 38.2% or the wave 4 termination point was around the 1.2220 mark. That is falling in line with, I mean, this is not required, but if it is, then it makes a lot of sense. So get ready and get set for the first trade, brothers and sisters, and there we go. I think we are almost done now. One more confirmation if you would like to take on a smaller degree as well. Wave C normally unfolds into 5 waves, and there you are, the third wave terminating at 1.2245, and the fifth wave terminating around 1.2209. It falls absolutely in line with the expectations. Alright, so here's the first trade coming up on your screens, hourly charts. You might want to take note of that and also look to implement. Now before we this is real trading now, okay? This is not a tentative suggestion or a request or something like that, because if you are here with me in the live room, that means you mean business, you mean to trade. So the first rule that you should be looking, or every one of us should be looking, is risk management. Now I have gone hayward. It's nothing wrong in accepting here. I've gone hayward sometimes in this area, risk management, and believe it or not, each time I've gone hayward, I've paid the price, and very heavily. All right. So risk management, ideally, what is all about risk management? You already know that is your risk versus the reward that you're expecting out there. In simple terms, we are talking about pips, okay? And then there's another thing which helps you decide on your risk management, is the percentage of dollars that you are risking per trade, right? And that should fall always somewhere around 1 to 2%. Ideally, sometimes it may go 3% or above that, but should not exceed about 5%. So if you're risking 1 to 2% of your trades, see what happens. Since that we've started discussing, let's take one more minute. So it's your ideally it should be around 1 to 2%. And it just got out of my mind what I was going to discuss. Okay, so just take into consideration the lots that you're trading. Let's say if you're trading one lot or standard lot. Now you know what's the risk in pips. Let's count the pips. Right now the trade is around 2442. The stop loss should go above 2537 by at least 10 points. So it's just about 100 points, right? If you're trading one standard, that means $10 a pip, that is $1,000 risk. And what's the reward, brothers? 2209, that's almost 200 plus. So the risk reward ratio is more than 1:2 plus, twice your risk. So as far as the personal risk reward ratio is concerned, it's good. It should be at least 1:1.15. 1:1.5. Here you are getting double. That's fine. But in terms of money, if you are risking $1,000 for 2,250, is that $1,000 falling into 1 to 2% category of your amount size? For that, you must be having you should be having a client deposit of or a margin deposit of $100,000 for 1%, which normally won't be the case. So cut down your lot size here. I repeat, cut down your lot size, and from a standard to a mini, that is $1 a pip, brings down $100 risk. You understand? Risk on a mini lot would be how much? $100. So let's say $100 is your risk, and what you're expecting reward is 225. All right, so risk reward ratio is good. And then if you're on a $10,000 account, that is 1%, or if you're on a $5,000 account, that's 2%. Right? Why is this required? Why is this ideal? Why? Because let's say you're on a 1% risk. How many trades are you getting? 100. On the losing side, you're going to be in the game. You're going to stay in the game for 100 times continuously if you go on losing. Now, I'm not saying that, I'm not inspiring that you should go on losing 100 times, but the kind of psychological and mental relaxation that you have, okay, that I've got 100 trades in my pocket, nobody can get me out of this business until I'm wrong 100 times. This is important. This is where maximum traders, and including me, when you can count me, in the past, I've lost money from my pocket in spite of the fact that I was in debt. Right, but I've learned the hard way. It's easier than saying. It's very difficult to implement this, but if you can, then you're going to be very thankful to that you did so. Okay. All right. So a lot of talking on the risk reward front. Now let's trade. Now that's the first trade for the day. Euro USD. This is what is the format. Okay. We will be selling around at this point in time already sold it, so if you are interested, take this trade around this price, 1.2437. You can take your spreads into account, brothers and sisters. And the stop loss is going to go 10 points above the high. So the stop loss would be around 1.2547, or you can round it up to 50. Alright, that is just just above 1%. That is just above 100 pips. And the target, now this is your target. The first target is, let's find out. The 38.2% is 1.22. Let's come out before 56. So first target would be 60, and the second target would be 1.2220. Alright, so those are the first trade numbers for the day. Euro short around 24.37, stop 25.50, and target 22.60 and 22.20. That's more than 1:1.5 risk reward ratio. And certainly if you are trading one mini with $10,000 account, that is 1% of risk. And if you are trading one mini on a $5,000 account, it is 2% of risk. So let's say if you are trading with, let's say, $2,000 account, then you must trade one micro lot on 100 point is $10 of risk. Just listen to this carefully. It is $10 of risk. Now you will say that, okay, this is too small a process, and I'm going to take a lot of time to make money. But this is business. Take this as a business in terms of percentage, and you'll be good. Okay. This is how you decide your lot size. Now, believe me, I am a very aggressive trader. I don't trade this way. Sometimes I take good risk, but that is sometimes. But and I would be lying if I say that, okay, I've made a lot of money trading haphazardly. No, whenever you step out of your line in terms of risk management, it puts a lot of pressure on your mind, and then most of the time you end up on the negative side. So if you want to just relax and if you want to enjoy this game, want to have fun, then this is the right way to trade. Alright, so that's the first trade of the day. Good luck to you, and let's go back on the other side. We'll be primarily focusing euro, dollar index, gold, silver, and Bitcoin. Right. I don't have the charts for Bitcoin today, but from tomorrow I'll be having all the charts with me. Similar terms on the US dollar front. Why I'm taking you back? Because that's the systematic way how you play with your numbers. You don't need to do this exercise every time you want to trade. This is the first time, that's why we're doing it. Alright, so wave 4 kind of terminated here of a larger degree, right? And then you got the first wave, the second wave. I think we've done with wave 3 a neat little pin bar, and what's going on right now is the process of sideways activity or consolidation. Most probably should be looking towards a wave 4 there. Alright, and taking out a channel. Let's do a channel as well. We'll connect waves 1 and 3, and then draw a parallel across the second wave. There you are. I don't do the channel technique most of the time, but sometimes yes. But never a trade goes without these things of wave counts or the Fibonacci ratios. So if it is the fourth wave of a lesser degree, believe it or not, it should be. It's a guideline. Okay, it's not a general rule, but it's a normal guideline that it would go and terminate around the 38.2% mark uh, of the third wave, right? So that is coming around the 90-64 region right now. I mean, you can take 10% plus minus, or a few percent plus minus. It could go all the way as close as 91. So we will keep a close eye on between the price 91 and 60. That would be our area of concern and the area of our interest. Okay, where we would like to take profits. And then don't forget your interim support comes in at 88.40 45. So your stop loss will be going slightly below that, and your take profit around the 90-60. That's a trade plan. Okay, and now the resistances, note it down. If you're making it a habit, it's going to act good. Resistances you would want to keep eye on, that is the 91, the first one. Above that it is about 92.50, and then 94.25, and then about 95. All right. And then you might note the interim support around the 88.45 mark. Projected entry, might want to buy it around the 89 mark, and projected targets around the 90-60 and 91 mark. Alright, that's the preliminary analysis what we got with the daily chart. I'm not doing other wave counts, because if you have been attending the other live sessions, you already know that we are very close, in fact very close now to have completed an impulse. Waves 1, 2, 3, 4, and a fifth wave is on. Right, that's a neat little setup now. If you are not knowing the wave counts, then you would want to do that first and then come out with your projected trades. Alright, let's go back on a 4-hourly chart now. You might want to remove and clear your charts up, the activity that you did on the daily chart. Again, you can do your trend lines as well. Not necessary to be absolutely in line with what you did on the daily chart, because your boundaries have changed. And more or less this is wave 3, so your Fibonacci ratios will be the same. We are expecting your price targets to hit. There you are, 90, 65. have your trajectories in mind. If you're working normally with the dailies and the 4 hourlies and the hourlies, I think you're done. It should do the trick. And as you're watching, we are doing it live. We are doing real time analysis and placing trades here. There is no reason or there is no requirement. See, if you're doing it, if you know it, and if you're placing it, that's fine. It's your choice. But I have time and again uh, heard, what about the oscillators, or what about the indicators, what about the Ichimoku cloud? I don't know what is there in the indicators so much. All right. If you know the indicators, I repeat, brothers. I mean, I'm not against them, but the problem is I've not done them, and I don't feel the need to do so. So the best thing in analyzing a particular chart, if you really want to become a technical analyst on your own, you've got to believe on yourself. There will be phases, there will be times where you're absolutely down and out. All right, this world is very harsh. They're going to come up very harsh on you. Uh, but then at that point in time, if you go into depression, you're gone. You're the only one who's going to keep saying to yourself that, all right, fine, that was done in a wrong way. I accept it, but that's not the end of what I know. All right, so keep saying this to yourself, and never ever stop watching or stop spending time with the real time chart. I mean, that is where everything lies. I mean, that is where the story lies. We are not storytellers. I mean, believe it or not, the second name to our profession is to tell stories. I mean, okay, and find out the facts. You don't need indicators, brothers. I mean, you don't need. I mean, if you know them, absolutely welcome. Move. If you don't know them, don't worry. Keep these 3 4 things in mind, and you'll be very fine. All right, that's the 4 hour chart. You might want to go and have a look at the oscillators as well. But this is not a compulsory step. I mean, just to gain one more bit of confidence level, you might want to do that. That's all. You might want to have a look at the RSI, and it is bouncing off the 38 mark, so everything is good. Just watch out for a resistance around the 70 mark by the time prices rally towards the 90, 50, 60 region. All right, so planning is in our hand. What we can maximum do is reduce the errors that we've committed in the past. All right, and when you're planning, one way or the other way is to eliminate your chances of creating errors. Right? That's why following these rules and steps are critical for our success in the trading. Believe it or not, 2018 is going to provide us good trading opportunities, huge trending opportunities. It's going to be positional and intraday and intraday kind of trading opportunities that we are going to see. All right, coming back on the hourly chart now, we are right at the hourly chart. We've got waves A, B, and probably we are moving, or we are going to move towards the C wave now. We're going to create a band for that wave C, either 90, 60, or it might go all the way towards 91. That is the price band. Alright, so the trajectory has come down to the hourly chart. You might want to wait for a good trading signal. If you remember, a morning star or a tweezer bottom or an engulfing bullish, those are the 3 trade signals. You might want to wait before you go and hit the short. Otherwise, counting waves is absolutely necessary. We've got wave A, wave B, Wave C is most probably going to be unfolding into 5 waves, right? It's a 3-3-5 structure. So keep in your mind and take the extensions of the larger wave and the smaller waves both. Let's see that. That's the extension, right? So okay, let's extend. So the first target around 90.37, and you might be surprised they might go higher towards 91 as well. But we're not worried about that right now. 90.40. So let's count the risk reward ratio now. We are counting 90, 40, 50. Okay. And one more thing, you can just have an extension of wave C. If you count 5 waves from here, brothers, don't you think the third wave extending around 90-20, and then there would be a fourth wave and fifth wave, it would easily go around 90, 50, 60 mark. Okay, so things are looking in place. What could be the risk reward ratio now? The stop loss is always in your hands. So in our hands, sorry. So 88.43. So we're going to place our stop loss at 88.30. That's 88.30, and right now prices are around 89. So that is 70 points of risk. And reward is about 100 and let's say 120-30. So again, it is almost 1:1.5 risk reward ratio. So primarily we should go and we are allowed to take this trade 1:1.5. Okay, so let's hit the board now. Always look at your equity management. That's the percentage risk is in your hands. You need to calculate your percentage risk. I cannot do that. I don't know what deposits you have. Okay, in case you have got any doubts as to what we've discussed about the risk management till now, do not hesitate to write to me at this address any moment. I'll get back to you and I'll explain. We'll discuss again what the risk management should be. Alright, so the trade number 2 for the day is the dollar index. Look to buy around the 89.02 mark right now. Please take into account when you're placing a stop loss or entry orders or whatever, limit orders, take into account the spreads. Okay. Stop loss is going to go at 88.30, and the target, two of them, one is 90.00 and the other one is 90.3040. All right. As I said, this being a trial session that I'm doing it for you, I would keep today's session minimized to or limited to euro and the dollar index. But believe it or not, the actual session we will be touching not only euro dollar index, we're talking about gold and silver and Bitcoin and the indices, the Dow Jones and many more indices. So more, it's not about more we discuss, more we trade, more money we are going to make. We can make money by 2 or 3 instruments as well. We did exceptionally well in gold during the November-December series. It was only the second half of December when it went all the way on the opposite side. But that's fine. That phase is gone now, and the past results have got no indication about what you can do in future. That's what I believe in. All right. So let's bring the first session to a pause here, and don't forget, this is the web page where you can just visit and find out the please subscribe here link for all the live trade calls on your telegrams. You'll be invited to the telegrams, you'll be added rather. You just have to mention your telegram username after registering, and I'll add you on that channel. As well as that, I'll be adding you as a accessible member to this channel where the current live session is being broadcasting. The name of this channel is Live Trading and Interactive Session. It's the second channel, which is a private one. Alright, so these two things and many more services will be launched, the prices being the same. Alright, so it's being set now, the free side, the freebies and the subscription side, and that's going to remain for now. Alright, so I'm bringing this session to a pause now, and I'll be posting right after it's done or on the Telegram Japee for you to watch. And then if you're interested, I humbly welcome all of you and urge you to go and subscribe. You're not losing anything. 9 days, the first 9 days for all, they're all the free trial. You may want to cancel, you can cancel anytime. Alright, so see you on the other side. Until the next session, routine tomorrow, UK times, 2:30 AM Eastern. Good luck to your trades, and please take care and God bless. Goodbye.